To summarize what's happening in the markets today, there's a single word that comes to mind: uncertainties. Uncertainties are all over the place, and in today's video, I'm going to talk a little bit about how I plan to trade all these uncertainties as well as what they are. Let's jump in. Welcome back to the channel, guys. I hope you're doing well. We got NASDAQ down 2.8% today. The S&P 500 is down 1.7+%, and the VIX is up 15% on the day. You've also got gold flying higher, you've got silver moving higher, and you've got yields dropping. This today, especially with TLT up as well, all this combination tells me the market is feeling a little bit nervous, feeling a little more on the risk off side of things. The least of which we could mention, not the least of which actually, is the yen. The yen really strong today. So let's talk a little bit about some of this uncertainty that we see. So one thing we've got to mention is the election, which has actually seen a bit of an interesting development as the Democratic Party has actually seemingly selected their nominee, going to be Kamala Harris. And if Kamala Harris is, if the Democrats, they're seeing a lot of funding unify here, and they're on the same page about who their, counterpart to Trump will be, is selected now. We've seen some interesting shifts in the predicted.com's or predicted.org's probabilities. We actually see the probability for a Trump victory actually sliding a little bit here, at least according to bettors on the site, which I always bring this up because historically speaking, the betting community or the gambling community actually is taking advantage of a lot of known information and has historically been pretty accurate at predicting the president. So we see Harris actually on the rise here recently, which makes for an interesting shakeup on the stage. A week ago, it looked very different. Now we see a bit more of maybe a competitive election. So the markets are saying uncertain. Now, I know that there's going to be people who are, they get all up in arms about politics, and they might say, well, the pro-Trump people might say, well, now that if Harris is, the president, she's going to crash the market or whatever. Or, other people might say, well, if Trump's the president, he's going to crash the market because he's going to escalate things with Taiwan and China. There's all sorts of different opinions and feelings floating around. But here's what I would say about it. Whether you like Trump or Harris or whoever you like, one thing that the market we can all kind of agree on doesn't like is uncertainties. And the market right now is not sure. I mentioned the uncertainties as we got started in this video. In fact, that's the name of this video. We're going to name this video Uncertainties because of that. Uncertainties with who's going to be the president, whether it's the right or the left or so on and so forth. I think that uncertainty is more important than who actually becomes a president. And bear with me, I'll explain this. If the market says, look, we don't know who the president's going to be, and there's a lot of questions that are left unanswered for now, the market might just sell off. But if we know very likely it's going to be Trump, or we know very likely that it's going to be Harris, then the market can settle down and say, okay, well, now we know something. The cat's out of the bag, if you will. This effect in markets is actually pretty apparent. Another great example of this historically was when in 2022, the dollar index just kept screaming higher and higher and higher. Why did this happen in 2022? Well, it's because the Fed kept saying inflation is, we need to beat inflation, and we don't know where it stops. Inflation was just rising and rising and rising. And so interest rates were going higher and higher, and people were thinking we'd have some sort of fallout event in the economy. Well, the point is, when the markets don't know, they have very little clarity on what's going to happen next, they hate it. And so this rise in the dollar caused huge crashes in the stock market. The NASDAQ was down like 38% during that year. The point is, uncertainties are something the market doesn't like. So when we take a look at the performance of the market here today, the S&P 500 has sold off from its highs. This is marking now about a 3.5% pullback from the previous high, which is, a meaningful pullback, but nothing ginormous. The market overall this year is still very, very strong. And I personally am more bullish than I am bearish and waiting for some possible setups myself. The NASDAQ, I got stopped out of my trade here, took a loss on this one this morning as things did roll over. I thought we'd hold off this support, and we did initially, but rolled over and broke support, so I'm out of that trade. I'm looking for opportunities to get back in the NASDAQ. If I can find a good setup, I will probably take that and share it inside of our Discord community. One thing that's working well, though, in all this uncertainty is good old-fashioned gold. I am long gold. I've stayed long gold, and I re-entered a few days back. This ended up being a decent spot because now we see gold actually pushing back up to this level here, this 2430 level. Let's see if we can break that. But with all this uncertainty and our VIX rising so dramatically, it is possible that we do see gold make a push here back to the all-time highs, the nominal all-time highs. Remember that the inflation adjusted for today's dollar value is actually the all-time high is like 3,200 for gold. So I think we have a lot more room to the upside with gold, especially with all this uncertainty. I remain bullish. I like the trade, and we're doing okay on that one. So I'll keep watching gold. That one's helping me out today. The other one that's helping me out is my dollar Swiss short. This trade is going very, very well. Markets sold off today, and I've trailed my stop further into profit here, just above this swing high, which all of these trades, by the way, have been called out inside of our Discord channel, where we share each and every trade that we take. And for context, this is what it looks like. You can find information about our Discord down below in the description. Now, in terms of top setups today, I wanted to just show you what's kind of on my watch list. If I take out the neutral readings from the top setups page on the Edge Finder, and I also like to remove minor currency pairs because I personally don't trade them that much, we can see what we're working with. We have a couple interesting setups that I want to look a little closer at. We've got the Dow Jones, dollar CAD, gold, the US 10-year Treasury bonds, the NASDAQ, the Russell, the Pound USD, and Bitcoin. So these are things that I'm generally going to be looking for opportunities to be on the long side of. I'm already in a couple of these positions. As I mentioned, I'm long gold, and we'll see if we can find some other ones to play as well. On the bearish side, we have dollar yen actually giving us a bearish reading, perhaps a bit of a risk-off signal in the currency world. So kind of interesting to see that. The commitment of traders data also still shows pretty strong demand for gold from institutional money, oil, pound, silver, USD, and the Dow Jones is the primary US index that's on there. So that's why the Dow Jones on our top setups page is getting a really strong, very bullish reading overall. So I do want to take a closer look at that. Before I move on with this video, let me just remind you guys that if you have not already heard, we are currently doing a massive discount on the Edge Finder. We're doing 50% off right now. And if you're watching my video right now, we have a special extra discount for subscribers. So we're actually going to do 55% off. And let me speak very candidly to you. If you are somebody who wants this tool and you've thought about it, today is the day to get it for the lowest price of the entire year. We don't go any lower than this price ever, and 55% is the best discount you can get. So if you would like access to the Edge Finder for 55% off, the first link in the description will take you to a live chat center where you can speak to someone on our team about getting that discount and any questions you might have about the tool. So when you click that first link in the description, this is what it looks like. You just hit chat now, just click the Edge Finder summer sale to get 55% off, and that is a limited time offer. Click start chat and you'll be connected to a real person on my team who can help you out with that. The dollar index also being down today is very interesting because you might think, well, what's going on with all this? If you're seeing the stock market down, doesn't the dollar usually go up on days like that? And the answer is in a lot of days, yes. But today what we see is some concerns about the consumer really creeping up. I want to show you a couple things that might give you a little bit more insight on this. Here's UPS, which many of you guys might know. This is a transportation services. They do packages, right? And UPS got killed after their earnings came out and missed both on the bottom and top lines of their business model. Their earnings coming out really was kind of a room shaker, if you will, kind of creeped out the markets because this is a very standard business that is involved in transporting products and shipping stuff, and that being down so much is really concerning to the state of the economy. But this is not where it ends. Take a look at like Nike. Nike's gotten killed recently. This is a company that, of course, everyone knows Nike, and Nike is struggling. The consumer is finding their stuff too expensive. They're just not feeling as rich as they once were, and they're not out there spending money like they were. So people are feeling the pinch of expensive grocery store prices, and gas prices overall have been pretty high in recent times. And the point is, we also have things like Starbucks down, right? These are consumer discretionaries is what they call them. And we can actually take a look at an ETF that tracks a basket of these types of companies. And what you can see is that consumer discretionary as a sector has really taken a hit here. Now, think about this. These are consumer optional purchases. That's what I like to think of. If you think about, Tesla and Nike and Starbucks and Amazon shopping, like these things are not things that people have to do for the most part. They're things that people want to do, but sometimes can't afford. forward. If that spending is drying up, it shows as an indicator what the consumer is looking like, and that crack in the consumer could seriously cause some concerns about the broader economy and maybe even take us into a recession. Now, I want to add to this because there's something else we've got to look at. If we take a look at, for example, go to economic growth and we take a look at manufacturing PMIs, the manufacturing PMIs in the US have been considerably slow over time. Well, not considerably, but they've been slow over time. Remember that a reading under 50 for a PMI is indication of decline and a component of the economy for PMIs. And we've considerably seen a consistent theme of slowdown in the manufacturing component of the economy. And on the services side, we've recently seen a little bit of slide. Now, the US economy is heavily built on services. And so this crack, this slowdown that we're seeing is interesting, especially when you couple it with stock earnings coming out a little bit poor and the consumer showing signs of weakening there. And we also have, if we take a look at retail sales in the US, retail sales have been pretty bad, right? Pretty unimpressive. The consumer is showing signs of weakness here, but it doesn't stop there. Look at this. Take a look at labor data. We've made this point many times on my channel, so I apologize if you've heard it 74 times. Here's the 75th. What we see here is unemployment claims are rising, right? The labor data is starting to show signs of cooling. Not crashing, not horrible weakness, but cooling. And this is contributing to people spending less money, arguably, because if less people are getting jobs, less people are getting employed, less people are getting wage increases, that is going to hit the bottom line of companies in the consumer discretionary side of things. So we also have JOLTS job openings deteriorating. We also have unemployment rate rising. This is not at threatening levels per se, but it's starting to trend higher, which is a little bit of concern for the Fed, which is why I continue to think that interest rate cuts are likely to happen this year. The question is, it's a race between the economy and inflation. Is the economy going to see rate cuts fast enough, soon enough to save the economy from really seriously slowing down and leading us into a recession? That's the debate that we'll continue to fight every day to figure out on this channel. If you enjoy my content, do me a big favor, hit the thumbs up button, subscribe. And last thing I will say is that if you're somebody looking for a better brokerage, I've got some cool links down below in the description that I want to tell you about. So if you open up the description, I'll show you what it looks like. Chandler, if you could show a visual for us in the description. Check this out. So we've got a couple different brokers that are all linked down below for you that have special sign-up perks. When you click the links that are down there, you can find special sign-up perks available to my subscribers. And if you're looking for a better brokerage and want to help out the channel, this is a great free way for you to get something for free and to also help support my channel and all the effort that goes into these videos. Thank you for watching. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now, you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.